AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the half hour, 45 minutes, maybe an hour, Mr. AJ Brown. How are you doing, AJ?
Good. Happy holidays, Sip.
That's right. We got an interesting episode today heading into Easter weekend. I believe the markets are closed, correct?
Yeah. The markets are not trading today, although the government's open. The U.S. government's open, and there's plenty of economic news being released today with the personal consumption expenditures index being released. But yeah, no, the markets are closed.
And so we have our Q1 in the books. We do have some economic data. We're hitting all-time highs in a number of markets. Where do you want to begin? Do you want to let's see what economic news we've got this week? What is the economists telling us about what's going on in the market? Q1, things are looking good, no?
Yeah. Last week, last week we talked about the whole housing thing, you and I, during our AJ Brown show. Well, we had new home sales, and last week we had starts and permits, and we had existing home sales, and those were all showing some strength. New home sales kind of fizzled out this week. Nothing exciting about new home sales. I mean, we could take a look at that really quick, just because I'm paying attention to that. That's more of a medium to long-term problem here in the States. But you can see that kind of the same number. They hoped for higher numbers in February, and it wound up being the same numbers. So, chugging along on that whole housing issue. But that's one of the biggest expenses that people have these days, is paying for housing. We had on Tuesday durable goods orders. In January, durable goods orders really took a hit, Sip. Today, in February, they kind of came back. But, if you drop 7% in 1 month, you have to gain, right? Because the percentages then become a new reference. So every month there's a new reference. So if you drop, say for instance, if you drop 10%, you have to gain like 12.5% to get that 10% back on your new number, right? So if you drop from 1,100 to 10 to 1,000, then to get back up to 1,100, you have to gain more than the 10% you dropped. So here, 1.4% gain still has not even, erased some of the losses we had in January. So in other words, people are not really buying big things as much as they were, say, in the fall.
And that's
then,
like cars and washing machines and things like that?
yes, these are the things that are going to last you more. They're not consumables, so they're going to last you a few years, if not a decade or so. People are making their cars last a couple of decades now. Consumer confidence continues to kind of erode, right? When it gets down below 100, it means that people are a little bit on the negative side. So it was up as high as 110 this past fall, but it's been slowly kind of coming down. They thought it might pop up again, but it was revised down in February, and it came in low for March again too. So people are starting to realize that, there's some tightening going on. But then we got our GDP numbers. This is the final look at Q4 of 2023 before this group in the government starts looking at Q1 of 2024, which is what we're going to talk about a little bit later. But you can see that they actually had finally, after they went through the numbers 3 different times, they kind of pumped up some GDP numbers. And they also pumped up their PCE numbers, but then today the PCE numbers were officially reported, and they weren't this high. So I'm not sure why they report the PCE numbers as part of the GDP when a day later they actually come back and officially report the PCE numbers. But the key here is that the economy in Q4 of last year really did grow at a higher clip than they expected, 3.4%. We'll see what they say with the advanced numbers on Q1. Today was that PCE number that the Fed looks at so drastically. And so you can see, for instance, income came in less than expected and much less than what it was in January. This is the growth in our incomes overall. And then expenditures actually increased significantly, 0.8% increase versus what they expected, which would have been a 0.5% increase, and what was reported last month, which was only 0.2%. So our expenses are up, our income is up, but not as high as expected. And then when they start to calculate the PCE price index, well, that was a little bit lower than expected, and that's going to make the Fed happy because they pay attention to this PCE price index number quite aggressively. And the core PCE price index number came in right as expected. So this is going to be pretty good news for the Fed. If you take this number and you take this annual number, I mean, this should be making the Fed pretty happy.
Which is going to want them to they're going to want to lower rates, right?
Yeah. Although, if you look at this, this is what investors are looking at. They're still thinking that the Fed is going to be in kind of wait and see for May. So May 1st is the next time the Fed meets. And it looks like it's almost a unanimous. It's a pretty heavy majority of investors say the Fed's not going to do anything. But we are seeing that there's a lot of folks who think that the Fed will take their first action of reducing rates in the middle of June. And if I come over here to the December 18th, it's pretty confident, that the Fed will reduce rates 3 times this year. And they've even alluded to that in their rhetoric. Now, whether the second and the third times comes in July, September, November, or December, it's a little bit too early to kind of guess. But there's a lot of confidence around the first Fed drop in rates. Unless something surprising happens, it's going to happen in June.
And it's almost like, oh, a quarter basis point or, oh, 2/4 basis points. Is it really going to make a difference when you look at how we ran up to these interest rates, right? And then it seems as if that GDP 3.2 is still really strong. So, even if we come in at a 1.5, a 1% in Q1, like we're still growing even with the highest rates that we've had in how many years?
Yeah, it's true. I mean, 20 plus years, right? The scoop is that the Fed, having those high interest rates is like going to be the new normal, and pulling back, it'll get people excited at least for a little bit. But will it change much as far as our expenses? I mean, I don't know. I know that in mortgages, there's a lot of activity around trying to get people to lock into mortgages at a higher rate, because some of these banks, know if they lock you in that higher rate that you won't want to change. So there is an expectation that, we'll get 0.75 of a point rate drop this year. So, people are waiting and seeing because they're going to refinance some of their debt, I bet.
I did come across 2 interesting posts on Twitter this week that are in line with what we're talking about. This chart here is typical U.S. households make $29,000 less than is needed to afford a median price. So that's kind of what this chart is here, which is when you were bringing up the housing issues. Housing is a very large transaction for a lot of people and a big driver of inflation, kind of, right? In the sense that our housing prices are so expensive that X amount of people can't even afford it. And not to mention that I think we're like 3 million short in the US in general. So housing is definitely something that's on people's minds and has an impact on things. The other one that I came across was oh goodness, let me find it. Is that I wanted your opinion on was this. JP Morgan says stocks are so crowded they may crack at any time. And this chart here is saying is that we could drop as low as 4,200. And so I'd love to kind of compare that to what you see in the S&P, because we've been looking at it kind of hit that like pivot, I don't know what they call that, but it's just teetering and teetering every week at new highs. And JP Morgan's out here saying that, man, if we break, we could go all the way down to 4,200. What do you think about that?
It's been a lot of pressure in the making, right? Let me throw some of my favorite little indicators on here. This is my moving average indicator. And so you can see here, we really haven't had any sort of distribution in, gosh, close to 6 months. You can see I've got a 6-month chart on here, and where my linear regression line starts, where we are saying our uptrend has happened, has started to begin, is almost about to fall off of my chart. What that means is that a lot of people are being drawn into the market that otherwise wouldn't be trading in the markets, kind of wooed by the rhetoric, especially around, what the U.S. does best, which is tech stocks, right? That's where we innovate the most. And so, yeah, there's a lot of money in the markets that isn't usually there. And I can see those people who put that money in pulling it out just as quickly as they put it in. One last thing that we should really take a look at is, besides just our charts, Sip, it's this, let's see if I can pull it up. It's this in the last week. If I pull up the gold chart,
all-time highs.
Now, gold is typically a place where people put their money when they're afraid of drops in the market. And that's a 1-year chart. Let me just come up to the last 3 months. If I pull up just the last 3 months, gosh, we're at $2,250. That's like a huge, it usually hovers around $2,000. So you're talking about over, almost a 10% increase in the price of gold because there's so much demand for it. So a lot of big investors are starting to hedge themselves. I mean, even look at, last week we saw just the overall weakness in crypto. Crypto is so volatile. You never know what's going to happen next. But crypto can also be looked at as a hedge against some silliness. And crypto's right back up. If you look at the price of Bitcoin, right back up to that $70,000 mark, the all-time highs. And so, I think a lot of people are starting to move their money slowly but surely into these defensive places. And, you're just seeing this build up this week, especially. Remember last week we talked about on balance volume, accumulation distribution with respect to volume, and RSI, and how even though Thursday looked like it was an up day, it actually was giving us a little bit of a signal that it was weak. And then we saw on Friday, and then on Monday, and then on Tuesday of this week, just selling below our line of ascending support. Then on Wednesday, some news came out. We saw some buying. Yesterday, it was pretty much flat, but we did hit, we gained a little bit. So we wound up getting to another all-time high. But man, it's getting harder and harder to push this S&P higher, and easier for it to fall. So yes, Sip, I'm kind of in the same place as Citigroup. You guys know I've been warning about this, but a market can stay overbought for quite a long time, and that's what we're demonstrating, but it's not forever.
Yeah, and that brings me to, what you do at Trading Trainer and kind of the strategies in that. Okay, well, how can I protect myself, AJ? Like if things are being overbought, what tools can I utilize to my advantage? And options is the answer. And there's a variety of approaches to utilize to take advantage of that, which is why AJ's got a wonderful workshop where he breaks down 4 of these strategies. But for somebody that's never used options, maybe has a portfolio that they've been seeing very good gains so far, right? How should they approach, our heading into quarter 2? I mean, if JP Morgan is correct, 20% to the downside could be very painful. But if you're utilizing options, I mean, you could be on the plus side of that.
That's exactly right. See, options allow you to short the market without actually needing to have a margin account. And also, options allow you to protect your current trade. So, here are some suggestions for folks that have a lot of long positions. I was talking to a good friend of mine who loves to dabble in the market, and he's been dabbling with NVIDIA, which seems like it will never go down. And, he was saying, I made this amount of money in NVIDIA in just a couple of months. And I'm thinking to myself, in the last couple of months, that was not hard to do. And he's a perfect example of that money that's not usually in the markets being wooed into the markets and kind of creating this continual move up. And he's probably also, unless he takes some of my suggestions, the perfect target to, although he's seen some gains in the last months, to then be underwater quite quickly. So some ideas is use some protective hedge options. They're cheaper than actually shorting the stock, and you can do them in a cash account. And so that means basically buying some puts. And I would buy those puts about 6 months out, right? I wouldn't buy near-term puts. They're too volatile. I would buy puts that are about 6 months out. And I would also possibly, if I got a signal that whatever long positions I'm in are topping out, in order to offset that purchase of those protective puts, I could sell some near-term at the money or slightly out of the money calls. That'll give me some money, right, that I can use to offset the cost of those protective puts. And I would definitely use that kind of collaring strategy when I detected a top, but definitely hedge your long positions. The other thing is I've got the VIX up, Sib, and the VIX is at a perfect place right now to do a overall portfolio hedging trade. The idea behind this trade is that we do 2 vertical spreads. And so what that looks like in a P&L chart turned on its side and overlaid on this VIX chart is that if the VIX does what it's supposed to do, then this trade would, and I'm going to, my trade is set to, my drawings are set to kind of disappear. So let me draw them back permanently so that they don't fade away. Here we go. So long as the VIX kind of stays in the range that we expect it to, you'll make a little bit of money, right? And that's okay. But should there be a overall very quick amount of uncertainty and fear that enters the market, which makes the VIX just shoot up, as we've seen in the past, every time there's a little bit of uncertainty and fear, the VIX shoots up quite quickly, then this particular trade would go from kind of a break even, make a couple of pennies, pay your commissions trade, to one that would offset your whole portfolio with massive gains. So I always like doing this trade, especially when the VIX is at its lowest, because that means I can get into the trade for as cheap as possible. And that's going to protect my long positions in my portfolio, because should something happen to them, even with our protective options in place, that could still have kind of a temporary down in it. This will offset it. This trade will then boost your whole portfolio to help cover any of those temporary losses from your long positions. So those 2 strategies, the one strategy of protecting any long positions, perhaps offsetting that protection with premium trades, and adding on this VIX portfolio position, especially in the next couple of days while it's, extra cheap, you'll be covered and then you'll be protected. And that's what options let us do, right?
Yes. And I feel like as you're describing this in my mind, I keep thinking, wow, we've been talking about this soft landing for quite some time, and history shows that that's not very sustainable. We, as a global power, like to be a little bit more volatile, and JP Morgan's out here saying, hey, we could see a pushback down, what, 1,000? That's 1,000 points in the S&P, right?
It's amazing how many economists have come out in the last 5 days ringing the alarm bells. It's not just JP Morgan. A lot of, smaller economists have started to ring the alarm bells. It's kind of resembling what was happening in 2008, in the summer of 2008. I'm having deja vu, Sip.
And correct me if I'm wrong, but by buying puts, that basically
Mhm.
means that if the stock or the market goes down, I'm going to make more money, right?
Mhm. That's
Perfect.
exactly right. Puts increase in value when the underlying symbol goes down. So if you buy puts against something and the price of it goes down, your put is going to go up in value. So, I don't get me wrong. I really wish the best that the Fed can do this, can continue to moderate the market, and we can continue to see growth. It hasn't been done in over 30 years. The last time the Fed was successful at doing this was in the early 1990s. And so, sorry for me for being a little bit gun shy at just trusting the Fed wholeheartedly. I've seen them make mistakes a lot in my lifetime. So I want to be protected, and I want all of you who are watching the show to be protected, as well as I want all of you, if you don't mind me saying this, Sip, to hit that subscribe button, because you really want to stay in tune with Sip and I over the next couple weeks.
Yeah, and we've been going over a lot of really good names week over week. And
Yep.
with that, I want to give everybody watching an opportunity to give AJ some names to potentially run through. We did have this next part of the show slated for our trending topic, but I think we're gonna just keep that towards the end of the show so we can kind of wrap things up.
Cool.
I did throw the link to AJ's webinar in the chat. So if you're interested in learning about how to buy puts, put on some different option strategies, head on over there and check that out. We're going to take a little bit of a break here. We'll come back with AJ's pick of the week. We'll go over some names in our speed round. We'll go through the chat to see if there's any tickers there. We'll wrap it up, and we'll head on our way to have an enjoyable Easter weekend with the family. It's supposed to rain here all weekend, AJ. So, I'm not
You
looking
know,
forward to Easter.
well, over here on the East Coast, I mean, I'm looking out the window of my office right now, and I am just chomping at the bit to go outside and play, because it has been rainy this week, but today the sun is out. So we're actually trying for the little one to see if we can find her one of those Easter egg hunts to go play around in.
Grab some photos for sure. All right, we're
I
going to take a
will.
break. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, we got a good question that just came in. I figured before we head into your pick of the week, let's go ahead and answer it. Hey, AJ, are your trading programs fit for retirees?
Oh gosh, yes. That's one of the biggest groups of people who take my trading programs is retirees. We've got retirees. We've got, interestingly enough, we've got some folks that are in their 20s and 30s that really like our programs, and then we've also got we tend to get those ladies that are in their late 30s, early 40s, and I love all my groups, but those are kind of the demographics. Back to the retirees. Yeah, I mean, one thing you got to keep in mind is that when you use options, you can turn a lot of margin trades into cash trades. And most brokers, when you have your IRAs and you have your SEP plans that a lot of people in retirement have, they want you to do, they want you to do cash trades. They don't let you do margin trades. So options give you that flexibility to be able to do these type of trades where you can protect yourself in your retirement account. So you definitely want to learn it. Just understand that for sure, nowadays you don't just call your broker anymore. We use a lot of these tools that allow us not only to analyze the market, meaning analyze the underlying symbols, and we especially look at equities. So we look at stocks, we look at exchange traded funds, ETFs, and indexes as our underlying symbols. But then the options is the next level on it, because then on each one of these underlying symbols, you can do all sorts of, all sorts of other strategies with those options. They give you a lot of creativity. So be prepared if you join one of our programs, number one, to get a little bit of computer literacy training so you could do these trades nice and easily from your own home. But then also be prepared as well to wrap your mind around all these different cool ways that you can take something that looks like it's not tradable in the traditional way, the buy and sell way, and instead make profits out of it. Because we actually, and we've said this before, we look for stocks that are absolutely boring, right? Stocks that would otherwise not get the attention, because those are the ones that we can start to create income off of by using option strategies. Every third Friday of the month for me is payday, because on the third Friday of a month is when these equity options expire. And when they expire worthless, that means that I got to keep the money that they generated for me, and I get to do it again and again and again. So that's basically what my portfolio does. I've got my portfolio invested in these options, and every third Friday of the month, I have to reset my trades because I just got a huge payday.
Yeah, I think that's the hardest thing for a lot of the new viewers that we have, is if they've never invested or traded, they're so exuberant to see returns and success right away, while the strategy is built for more of a long-term outlook and a lot less risk, which is great for retirees because you want to kind of limit that risk. And so, Mike, we hope that answers your question. And with that, let's go ahead and go over some of these approaches that could work in a retiree type of account with AJ's pick of the week. Every week, AJ's got a couple names that he likes to look at that he feels good about. And this week, it is ticker symbol ZIM, ZIM, and the company's name is Zim Integrated Shipping. This isn't that ship that crashed into the Baltimore Bridge, is it?
That was right up the street from us here at our home here in Washington, D.C. No, I actually don't know what the heck that was involved with. Boy, that is just a catastrophe, isn't it?
Very sad.
I read that there was a woman who was getting picked up for the BWI airport, and her Uber driver was waiting. And you know how Uber drivers wait about 15 minutes and she totally he was about to drive off, and she got there. She was 15 minutes late, but she got in the car, and it was good that she was 15 minutes late because they were heading for that bridge. And they got to the bridge and everything had stopped because obviously the bridge fell down. So you hear about these stories and you're like, man, we're always so close to not being alive tomorrow.
So this shipping company isn't that, but it is a shipping company where you are looking for a long. It looks like you just got a signal there.
Yeah, absolutely. So we got a signal on Wednesday night. You can see my little indicator. By the way, if you haven't downloaded my indicators, please go download those indicators. And we're busily getting them transcribed, or whatever you want to call the word, so that they can be used in other charting packages besides Thinkorswim. So you might want to get free access to our web portal, because we make updates to these indicators, and I hope to have the other software packages covered not too long from now. But we also, Sip, we featured Zim a couple of months ago when they were giving us this signal back here. So I wanted to follow up on this because if anybody did act on that symbol and basically either shorted some Zim or bought some option substitutes, and in this case on that past signal you would have bought some put option substitutes, now is when you want to sell your put premium and buy your protective calls. I know that sounds counterintuitive, but with our strategies are based on being what we call range bound, right? And so we're bound between this level of support and resistance. And if we make a trade at the top of the channel, then we can create our income trades every time we bottom at the channel. So if you took advantage of this trade back when we first featured it, now is when we're looking for selling our put premium and buying our protective calls. But you're absolutely right, Sip. If you didn't take advantage of it, now we're on the opposite side of this channel. And this is a signal that, this was an end of day signal on Wednesday. I'm going to actually show you here. I've got my follow through. So a lot of people were asking after we talked last week about follow through. So let me pull up Zim here. What I looked for yesterday, because I got my signal on Wednesday night. So that means I tried to trade it on Thursday. There's a couple things I looked for, and I have to be honest. I programmed the software to look for me because I don't do anything during the trading day for two reasons. One, my day is really important to me, and I like to spend it with my toddler. But number two is because I get emotional and I might make dumb decisions. So instead, when the pressure's off after the markets close the night before, I'll pre-program the automatic traders that are built into a lot of our trading platforms, and I'll let it do the trading for me because then it follows the rules I gave it and it follows the rules to the T. Whereas if I'm in there, I might get a little emotional and make the trade even though the rules aren't being met, right? So the rules that I look for is that, pay attention, guys and gals. I like to make sure that, number one, I'm trading above the confirming day close, right? So that would be making sure, in this case, trading above, this is a daily chart, by the way, that we're looking at. So you're looking at Thursday, right? These are 15-minute bars, and I'm trading above the confirming day close. I also want to make sure I'm trading above the previous day close. In this case, since the confirming day and the previous day are the same day, it's going to be the same. And then the other thing I want to be trading above is the day's open range, right? And so the open range is the high and the low of the first 30 minutes of trading. It's a little day trader's trick. And so I don't trade until the afternoon session, right? I wait until about 12:45 Eastern time, 1 o'clock Eastern time to do my trading. And so if I'm not trading above those two ranges, right, then I'm not going to be placing the trade. So as far as my signal on Wednesday that I got Wednesday night, I came back on Thursday and I didn't see that my trade had filled because these rules weren't met. And so I have to make a decision now. Should I try again on Monday? So here's that daily chart. I didn't get my trade on Thursday. There's no reason why, if I got some sort of signal that said, hey, like a purple arrow, if I got a purple arrow, then I'd probably stop looking for the opportunity to get into this trade. But I didn't get any purple arrow, so there's no reason why I won't do this same thing again on Monday. So again, on Monday now, if I come back to the daily chart, I'm going to program my automatic trader to, number one, let me get rid of these drawings here. I want to be trading above the previous day close. So I'll be looking to trade above this number. I'll be looking to trading above the confirming day close. So that's this number. And then when the open range is generated on Monday, I'll make sure I'm trading above that number. So whichever of those three is the highest, I need to be trading above that when I come in the afternoon session in order for it to make sense for me to make that trade. It's called follow through, and I want to make sure that those are present. So I hope you guys are taking notes on that, because I get my end of day signal, and then I'll look for trading opportunities the next trading days. And if they don't get met, every evening I'll evaluate whether I want to keep trying to get it or if I should stop. And that's just basically how I do it. I can do that in like 10 or 15 minutes in the evening after my toddler goes to bed, usually around 10 o'clock at night.
Yeah, so just while everyone's slaving away at their desks, AJ's out in the backyard running around with the kid, and then coming back and calmly looking at positions and utilizing some of these great free tools. Well,
I added one, Sip. I added another free tool. If you guys go look, and I told the programmers to add it. I have to check to see whether it was added. It'll get added if it's not there right now. But I love this RSI indicator, but I love VWAP as well. And I noticed that the standard RSI indicators in most of the charting packages are by default calculated on close. So I had my folks create an RSI indicator where you could decide what data feeds this. And so I'm feeding mine with volume weighted average price. It changes it ever so slightly. You could also, if you want to take into consideration the volatility of the days, right? This high-low close divided by 3 is a great number to play around with. But I'm calculating mine on VWAP. And so I've asked my developers to make sure that this indicator is in our free indicator bunch so that you guys could take I call it the RSI on steroids. So make sure you go and sign up for a free account and keep revisiting that page, because we're just throwing stuff in there all the time.
Yeah, and the link to that is in the chat. The URL is in the scroll bar. Head on over there. Lots of good stuff that will be making its way. Not only the indicators, but a lot of other great free tools for you to check out. So that's AJ's pick of the week. Zim Integrated Shipping, ticker symbol ZIM. We've got a couple names to run through in the speed round, and it looks like these are names that we've had recently that are follow-ups, and that's great. Heading into the beginning of quarter one, let's kind of do a recap on some of these positions we've talked about in the past, starting with Tim in Boston, Massachusetts. Wants to take a look at Marathon Digital, ticker symbol MARA. I think we just recently looked at this.
I featured it as my pick of the day. And so here's the scoop, right? We've got an end of day signal that came on Thursday, yesterday. So you're going to be looking for follow through on Monday. Now, a lot of our follow through, Sip, that we talk about, it's not just the technical follow through, because there's one last check after you get all your signals and your follow through, and basically the market is saying, hey, we found a bottom. There's one last thing you have to do. And in most of our trade plans, and that's what my program really teaches people to do, is how to create good trade plans, right? We plan our trade and then we trade our plan, right? That's the recipe for success in a nutshell. If I could say what is the success in being a trader, right? It would be to plan your trade and then trade your plan. Right. And a lot of people don't do that. They just kind of wing it and, shoot it like they do in the movies. But you got to be a little bit more, disciplined. And so in our trade plans, we always tend to, we always have price targets. So after you get your technical signal that, hey, it's time to trade, make sure that before you pull the trigger that you're going to be able to do your trade and either meet or even better, beat your price target. Because if you're not, don't do the trade, because otherwise you're not following your plan. So I always have that programmed in as well. I make sure that before the system tries to do my trade, that they verify that I'm meeting or beating my target price. And so that's what I say for you here in Mara. I want you to make sure that if you get your follow through, that whatever target price you have in your trade plan, that you meet or beat it. Otherwise, don't do the trade, because it looks like we're getting our signal a little bit late. And I'm worried that it's probably better to forego the trade than to do the trade poorly.
Yeah, and it looks like 30 would be that next support level or resistance
level. And that would be, if you don't wind up doing this trade down here, that would be basically Mara saying that you could dollar cost average. You could probably add more to your initial position if you haven't brought it up to the max that your trade plan said. So if your trade plan said you could do 300 shares of Mara or 3 contracts, and you only did 2 at this last signal, well, then great. You could do an additional one here and maybe get a better price, and it's called dollar cost averaging. Make your overall initial position at a better price so that when you do sell premium, you've got that much more income coming in. So only trade the signals that meet your plan.
That's right. All right. So that's ticker symbol MARA, Marathon Digital. Thank you for checking in with that, Tim. Moving into our next name, this is Lamont from Richmond, Virginia. Wants us to take a look again at PayPal.
Lamont, this was a great trade. So Lamont, I think it was either 2 or 3 weeks ago, gave us PayPal, and he was wondering whether to act on this signal here. And it looks like we did get our follow through on March 13th. I can see it right here. And so where are you at, Lamont? You have either some stock, some PayPal stock, or you bought a option substitute. That would be a far out in time. We're talking more than 8 months. Usually we look at leaps. So you probably have a January 2025 leap. That is a call option. And I bet you're really happy right now. So let's do this really quick, Lamont. I'm going to draw some support and resistance lines based on the last time we had a high. We're probably looking at something like $58 for support and $65.50 for resistance. In fact, I'm going to use my little drawing here, and I'm going to hard code those round numbers. I love round numbers, and most traders like round numbers as well. And so I've just hard coded it, and that gives me an idea. If I don't find a top, Lamont, by the time I'm trading above $68.36, then when I do find a top, instead of selling premium, I'll probably make more money just selling the stock or the substitute call option, whichever one you got into. So watch that $68. You could even round it, say $68.50. Watch that $68.50 level. If PayPal gets above that and then gives you a top, just take your money and run. You'll invest it in something else. If indeed it finds a top and starts coming down below $68.50, that's when you sell some call premium in order to offset your protective put, and now you've got a collared trade that's going to create income for you. So a lot of I'm excited for you. I'm glad you brought it up a couple weeks ago, because it looks like this trade is just kicking ass.
And just curious, would PayPal fall into like the banking sector? Like if things are happening, would it kind of correlate with those names?
There hasn't been an exact correlation as like those traditional brick and mortars like Citigroups and stuff, because PayPal has always been its own little thing. So there's probably a rough correlation, but PayPal's kind of like the red-haired stepchild that maybe could march to the beat of its own drum.
Yeah, I actually was listening to the Elon Musk biography, and a lot of people don't know that he was really on the ground floor of PayPal, and here it is still today.
Yeah.
All right, thanks for that, Lamont. Moving on to our third and final name in the speed round. This is Peggy in Boulder, Colorado, interested in Eastman Chemical, ticker symbol EMN. Look at that bad boy go.
You brought this up. I remember you as well, Peggy. You brought this up to us about 4 weeks ago. You were wondering about this signal. It looks like we got our follow through about 3 days after. So again, similar to Lamont, if you place this trade, I bet you're pretty happy right now because you probably placed the trade when it was trading at $85, and now you're up here around $100. So the underlying symbol has appreciated by $15. If you're in one of those substitute options, then, if this is a 15% or 20% increase in price, your option has probably gone up 50%, right? If you invested, $10,000, you now have $15,000 to your name. That's not a bad trade for 2 or 3 weeks. Again, I think that at this point, let's draw our lines. But I think at this point, I'm going to tell you, Peggy, that you probably would be best off. Yeah, you can see just by me throwing these lines in here, we're at the point where as soon as you get a signal that Eastman Chemical has topped, you may want to go ahead and just sell your back month option or sell your stock and take the profit and run. Selling premium once it's appreciated this much, it's not the strategy that we would use on something that's trending like this. Instead, we would just sell it. And that's what I'm going to suggest that you do. At this point as well, depending on how much your position has profited, you may even consider put a trailing stop of some sort that would lock in gains, and you wouldn't have to wait for the technical exit. You would, basically as the trailing stop ratchets up as your gains ratchet up, and then the minute that the stock goes against it, it would then go ahead and just automatically sell your position. So you may consider a trailing stop at this point too.
Got a lot of winners today. We got two more to run through if we have the time. Let's do SLV. I think this is the silver ETF. Is that right?
Mm-hmm. So silver ETF gave us an end of day signal on Tuesday to look for an opportunity to short. And, one of the things I look for, and I'm still kind of playing around with how I'm going to use this RSI on steroids indicator. But basically, this is a momentum indicator. And when I get this selling signal or shorting signal against the underlying symbol, I want to see that the RSI had some selling momentum right before that. And so you can see right here with these red paint bars here that indeed we did. So that means you're looking for follow through, right? And so if we got that signal on Tuesday, let's see if we had gotten that follow through as I've been talking about it on Wednesday and on Thursday. So I'll zoom in on my charts here. Here's Wednesday and here's Thursday. Because it's a sell signal, it's going to be opposite. Instead of seeing prices higher, I want to see prices lower. So I want to see prices lower than my previous day close and my confirming day close. And I want to see prices lower than the open range. In this case, it looks like the open range was a little bit higher. So it's the lowest of all three. So when I come in the afternoon session on Wednesday, I wanted prices to be below 2234. So I could see how my automatic trader would come to the end of the day without placing a trade. So then again, on Thursday, I would say, let's try again. I want to make sure I'm trading lower than the previous day close. Let's try it this way. I want to be lower than the confirming day close. So that's this guy again. I almost got it. And also below the open range. So it looks like that confirming day close is going to be my lowest number. And sure enough, I didn't trade below those numbers. So I got to say that I got that signal on Wednesday, but I did not place that trade yet. And I hope you didn't place that trade yet either, because we're still waiting for follow through on that signal. Now, I haven't gotten that signal to reverse on me. So what that tells me is I can continue looking for that follow through on Monday, Tuesday. I'll look for it every day until I get some sort of reversing signal. In this case, I'm using the fast MACD calibrated again on that VWAP. I absolutely love using end of day VWAP in my calculation. You could actually see I've got the VWAP line being drawn, and a lot of guys are like, well, what does that mean? You can notice that the VWAP doesn't quite align with the closing price. That's because VWAP factors in how the intraday volume accumulated, whether it was selling or buying volume. So I feel like VWAP is a better number for these indicators to be calculated on because it actually tells us the amount of traders behind that price change that happened that day. So you can see price dropped, but what VWAP is telling us is that not all the traders were behind that price drop. So it actually calculated that by the end of day that the price shouldn't have dropped that much. So when calculating these type of signals for us, we want to make sure we've got that volume component counted for. So that's why you see that I'm creating all these indicators for you to use where you can use VWAP and not just price as its base for calculation. So yeah, you're going to want to keep looking for that follow through every day until you either get it or you get a reversal signal. So that's where we are there. If you've got a covering position in place, then this signal, once you get it, would mean sell your call premium, buy your protective puts. If you don't have a covering position in place, then what this signal would tell you to do is either short SLV or buy some substitute options. So that's where you're at.
All right, SLV. One last name before we bring the show in to an end, and that is Verizon, ticker symbol VZ. Ooh.
Okay.
Breakout.
Yeah. So Verizon has been stalling, as you can see here, stalling for pretty much since the beginning of February. And we got this signal, and you can see as well, there hasn't been any momentum. So when we see this type of stalling, or the technical analysis term for that is consolidation or converging channel, consolidating channel, it tends to make the investors get nervous, right? And the longer that it consolidates, the more nervous they get, right? Because it's kind of like a pressure cooker. It's kind of like what's going to happen next. And every day that you look for something to happen and it hasn't happened, anxiety increases, right? Because that's what markets are, right? Markets are kind of hive mind, a whole bunch of people getting together, following each other, right? Which creates kind of this neat loop. And it's a huge psychology experiment. And when you start to think about it that way, you start to see that these people the anxiety was at an all-time high. And sure enough, something happened. And I would go back and look at the news headlines for Verizon, see what happened in the last week that caused people to start buying, and realize anxiety is at a high, right? So it won't take much. Like there just has to be a little tinder that gets thrown into that, bunch of oily rags. And each day that, nothing happened, another oily rag was added to the pile. That means that the tinder doesn't have to be that big to create a big breakout. And find out what that tinder was, because that could also give you understanding as to whether that tinder was enough to cause a big breakout or a little breakout. But it looks like Verizon is in the process of breaking out. There is some overhead resistance around here at $42. Question I have is, will it break out from that $42? If you got into it before the breakout occurred, good on you. I would say that it's a little late if you missed that opportunity, unless we see something a little bit more robust. But you can see we're already getting to the point where, the traders are saying this is overbought. So I would say if you didn't get in about a week ago to trade this breakout, I probably would say we missed our opportunity. Let's wait for a more predictable pattern to appear that we could trade in different ways.
Yeah, and Verizon I would consider like a behemoth stock, right? Like
But
there's
boring.
yeah.
I would say
Well,
it's one of those boring stocks too, unless they, do something stupid.
yeah. I there was like a month ago or something that a bunch of Verizon phones like networks went down and the
I
internet
remember that.
the internet was buzzing about it and everyone was moving. So that's as dramatic as it gets, I guess.
Yeah.
All right.
People lost their internet for like 6 hours, and that's like the end of the world, right?
Yeah. Well, that's I mean that's a solid 5 names that we ran through, right? No, 6 names, six names utilizing those option strategies. And hey, we're getting close to the end of the show here, AJ. I know that our trending topic was going to be Q1, right? Wrapping up Q1, heading into Q2. It's a unique day in that Monday is going to be the first of the month, the first of the quarter, the first trading day of Q2. Should we be how should we be thinking about next week, getting into, opportunities, looking for things?
I'm just going to echo what I said earlier. It's time to hedge our positions, and it's time to hedge our portfolio.
Plain and simple. Let's get those let's buy some of those puts. Let's look at some of those covered call strategies. If you haven't checked out AJ's workshop, the link to that is in the chat. Otherwise, pretty smooth rest of the Friday, right? The markets are off. The weather's good on the East Coast.
At least here in the DC area.
It's not bad today, but tomorrow is going to be rough. So, enjoy the time with the family. Collect your thoughts from quarter one, and let's head into quarter two and crush it. Yeah.
Let's do it. Let's do it, guys. We can make profits even if the markets go sideways or down. Get brushed up on those strategies. Definitely, subscribe to our channel so that you can keep involved with us. And yeah, we're going to make money on this situation.
That's what I was going to say. Please show some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions, feel free to throw it in the chat. Feel free to send us a DM, and someone will get back to you as soon as they can.
I'm trying to align my head with the background.
Oh, okay. There you go. Yeah. All right, guys. Appreciate you today, AJ. Appreciate everybody tuning in. The nice commentary. Hope everyone has a wonderful Good Friday. Happy Easter. We'll catch you guys next week.
All right. Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content